Today, we delve into the strategy of put selling in the stock market, using an analogy with auto insurance to enhance our understanding. Just like driving a car comes with its risks, investing in the stock market involves uncertainties. To mitigate these risks while driving, we use auto insurance. In a similar vein, the stock market offers a strategy akin to insurance, the put-selling strategy. Imagine you're an auto insurance provider. People pay you a premium for the assurance that, in case of an accident, you will cover the damages. In the stock market, when you sell a put option, you offer a similar kind of protection to other investors. They pay you a premium for the option to sell their stocks at a predetermined price, which acts as a safeguard against a significant drop in the stock's value. In your role as an insurance provider, if no accidents occur, you retain the premium without the need to cover any damages. This scenario finds its parallel in the stock market. If the stock price stays above the strike price of the put option, you keep the premium without the obligation to buy the stock. However, there's a flip side. Much like an auto insurance scenario where an accident requires you to cover damages, if the stock price falls below the strike price, you, as the put seller, must fulfill your obligation to buy the stock. This strategy, akin to running an insurance business, can be lucrative, especially in a market where the probability of a crash, a significant drop in stock prices, is low. The repeated collection of premiums, as long as the market stays stable, leads to profits without substantial payouts. But it's crucial to remember the importance of risk assessment. Just as in the insurance business, understanding the market and choosing the right stocks is key. It's about managing calculated risks, balancing potential gains with the responsibilities that come with the strategy. In the world of smart investing, think of put selling as offering a form of insurance to other investors. It's a strategy that demands insight, risk management, and a nuanced understanding of market dynamics. We hope this analogy has provided clarity on the concept of put selling. Understanding these strategies is vital in navigating the financial market, and we aim to bring these insights closer to you, making them accessible and understandable.